Hey everyone, it's James at Urivo with our March 2022 Manhattan market update. And just like the last couple of months, we've seen very slight increases compared to last year's levels, which were record levels. So we're eking out new records, just barely though. We're up 3% year over year. You can see we're scraping by last year's demand levels each month this year, and we're up 3% this month. The higher price points continue to be the outperformer, but that outperformance has narrowed. We are up 10% in that $2 to $5 million bucket versus 8 in the 1 to 2 and 5 in the 600,000 to $1 million. The lower end market is the weakest, and that's primarily because studios aren't in very high demand these days. But the real story is inventory. We saw a 12% pop in inventory compared to February levels. Normally we see about a 4% increase, so that's very encouraging. I know our buyers have been waiting for that for seems like a year. It's great, but we're still down about 19% versus last year's level. So it's nothing to get overly excited about, but it's a step in the right direction. And if we look at that chart, you can see normally we see an increase. Well, we do see an increase every March except for COVID, but there was a sharper increase this month. So encouraging. What's driving that? We're not really sure. It's probably just random more than anything else, but maybe sellers are trying to get their listings on the market to take advantage of the hot market before higher rates dampen demand. But whatever the explanation, there's more inventory out there, which is going to greatly help buyers. You can see across the price points, doesn't really matter which price point you're looking at, we're down about that 20%. And then going back to the rates, just a very quick nugget for buyers out there. If you want to know what mortgage rates are doing, just look at the 10-year Treasury. There's basically a 1-for-1 correlation with the two. And if you compare the 10-year Treasury now to the levels that we came into this year, we're up almost a full percent. And so that's being reflected in mortgage rates. We're starting to see buyers get quoted 4%, which was unheard of even just a couple of months ago. So while it is a higher interest rate, and theoretically, or in a vacuum, that does dampen demand, we haven't really seen it affect buyers' decisions yet. The mentality is basically, how much is my mortgage rate? How much is my monthly payment going to be? Oh, that stinks. Okay, put in the offer anyway. So we haven't really seen buyers throttle back their level of interest or the prices that they're willing to pay. Theoretically, that should happen, but we haven't seen it yet. So if you are out there, if you want to slice this data and look at your particular section of the market, we're happy to do so. We're also happy to help you buy that place and get you a commission rebate. And if you have any questions, you can always reach out to us at info@urivo.com. Thanks a lot, and we'll see you next month. Bye.